Good morning everyone. We'll quickly start with the revision of non-profit organization. It's a last day revision, so I hope you guys have gone through, or at least you guys are thorough with the chapter so that last day revision can go very quickly. Alright, so in this chapter the main objective is to do the final accounts or finding out the profit which is called a surplus or deficit in case of an NPO. In case of NPO, the main objective is not making profits but to serve a certain section of the society. Example can be education, hospital, schools, colleges, etc. etc. Alright, so in this chapter we may be asked to prepare a receipts and payment account. This is exactly like a cash book. You have an opening cash, you have cash receipts, then you have a closing cash, and you have cash payments. It is exactly like a cash book having all the cash inflows and cash outflows. Cash can pertain to current year, next year, previous year. The cash can pertain to CAPEX, OPEX, as the cases. All cash inflows and all cash outflows should be a part of receipts and payments account. Then you have something called as income and expenditure account. This is more like the profit loss account. It works exactly on the principles of profit loss account. Though there is no trading account, it is simply all the expenses, all the income is merged into one account, that is called the income expenditure account. Alright, then you have the balance sheet, so that you get to know the statement of affairs of a NPO. Alright, these three things is what are commonly to be done while finalizing the books of accounts of a non-profit organization. Then coming to the main aspect of the chapter, there is something called as subscription revenue. Now, since the main objective of an NPO is not to earn profits, there is no sales in case of an NPO. The main source of income in case of an NPO or a club or an education institute is nothing but members subscription. So you have to find the amount that is due in the current year as far as subscription revenue is concerned on the on accrual concept. How do we do that? We always start from subscriptions received. The subscriptions received can be of current year, it can be of the previous outstanding, it can be advance, as the cases. Since my job is to find the subscription revenue, I need to have the subscriptions accrual. So if subscriptions pertain to previous year, if they pertain to the next year, I may have to exclude that because my job is to find the current year's subscription revenue. So how the adjustments take place? First, I have to add the outstanding subscriptions in the end, exactly same like my debtors. If a sale has been made, for example, then even though money is not received, it's a part of sales, it's a part of trading account, it's a part of profits. Similarly, if an amount of subscription is due but it has not been paid, it is outstanding. If any current year subscription is outstanding, it should be a part of my revenue. The received content does not contain that. That is why you add the outstanding subscription which is outstanding at the end of the year. Similarly, if some subscription is outstanding in the beginning, this will be received in the current year, but the fact that it's outstanding in the beginning, it means it pertains to the previous year. Previous year's subscription will be a part of the previous year's subscription revenue, so I should exclude that from the current amount because current cash will include previous year's subscription, which is wrong. That is why you negate or subtract outstanding subscription in the beginning. Similarly, if I have received some advance in the beginning, that means it will pertain to current year, but I must have received that in the previous year, so it is not a part of current cash inflow. I need to make it a part of current revenue. That is why I will add the advance subscription in the beginning. Similarly, if somebody has paid next year's subscription, it should be a part of next year's income. That is why I exclude the advance in the end, and that is how you get the accrued subscription. And this amount is what actually enters in the outer column of the income side of the income expenditure account. Alright, we have done many sums, we have taken all the categories of, we have solved all categories of adjustments in this, in our classroom section. So this is how it works out. Then in certain cases, if we are doing NPO for, or we are doing final accounts NPO for say hospital, then in that case an adjustment is very common, that is consumption of medicines. My job is to enter that amount in the expense side of the income expense account. That is an expense. An expense is always any stock consumed. So how do you compute the medicines consumed? To get the medicine related expenses in the expense side, you start with the opening stock of medicines. This will be given to us as data. Then you add the purchases in the current year, and then you subtract the closing stock, opening plus purchase minus closing stock, exactly in sync with raw materials. When we do your trading or manufacturing accounts, opening stock of materials plus purchase of materials minus closing stock or unconsumed materials is materials consumed. I am simply replacing materials with medicines because my job is to find medicines consumed, and this consumed amount enters the expense side of the income expense account, opening plus purchase minus closing. Now there could be a small adjustment in this. Sometimes this amount of purchases is not given to us directly, so we may have to find the amount of purchases, and we will have to make a ledger or this format to find the amount of purchases. So medicines purchase, how do we find out? Imagine a ledger of creditors of medicines. I'll simply make a small ledger for understanding. This is a ledger that is creditors for medicines. You always start from opening balance, you have closing balance, and you have the payments, and the balancing figure is the amount of purchase. Either you make a ledger or you follow this format. The format goes like this: you start from paid to creditors, that is this amount. Alright, from paid to creditors I will add outstanding in the end, that is this amount. From that you subtract the opening balance of creditors, that is this amount, and balancing figure obviously is going to be the amount of medicines purchase, and this amount of medicines purchase is going to enter this format, and that is how you will get the medicines consumed data. So we have done a couple of sums. Maybe when we have done the RTP of NPO, there was a couple of sums using this data. So we have done that in the classroom section. You can refer that. This is how you compute the medicines consumed adjustment. Either make a creditor's ledger like this, or you simply solve with a format like this. Makes no difference. The final answer will always be the same. Please note, amount paid towards the creditors for medicines is not purchases. They are simply payments. This amount is going to be the amount of medicines purchased. So people normally get confused. Once they see payments made to creditors, they feel it is the amount of purchases. But this may or may not be the case because of the existence of opening closing balances. They have to be balanced, and balancing figure will be the amount of purchases, and this purchases will be then used here for the amount of consumption that needs to go in the expense side of the income expense account. Then the other costs and income. So as far as other costs and income goes, like my normal traveling expense, salaries, rent, advertisement expenses, all those adjustments are exactly same like final accounts, because ultimately we are doing final accounts, just that we are doing final accounts for an NPO and not a sole trader or a manufacturing concern. So whatever adjustments or whatever conceptual adjustments are coming or in the final accounts of a sole trader, all those things will come in the NPO adjustments as well. So all other things will remain exactly in sync with the final accounts concept. So add closing outstanding, less closing prepaid, all those things which comes in final accounts will also come in NPO final accounts, just that we don't make a profit loss account, we make an income expense account. Lastly, the balancing figure in the income expense account will not be called profit or loss, it will be called surplus or deficit. Surplus goes to balance sheet, add to capital, exactly like profit. Deficit goes to balance sheet, less from capital, exactly like loss. So profit and loss is named surplus and deficit respectively. All other things will remain the same. All the balance sheet adjustments like depreciation, like prepaid, interest on loan, all those things which we normally used to do in final accounts will come exactly the same in NPO. The only new thing to be learned in NPO is subscription, which we have discussed, and the consumption of medicines. And okay, medicines can be replaced by stationery also. So stationery consumed will be opening stationery plus purchase of stationery minus closing stock of stationery, and creditors for medicines will be replaced by creditors for stationery. So anything can be replaced, concept will remain the same. These things are new which has been discussed. Other things are exactly same like final accounts, so we will not discuss them in detail. And that is how we have revised the chapter of non-profit organization. In the next video, we'll be revising something else. Alright, see you guys. Bye-bye.